Hello and welcome to the latest Master Investor podcast. I'm Jonathan Davis and I'm delighted today to be joined by Tamer Ozmen, who is the CEO and founder of Mintus, which is a new trading platform. It's designed to allow retail investors to invest in works of art that they might otherwise not be able to afford. I should say, first of all, perhaps you could explain to us, Tamer, how you came to start this venture and briefly what your background is.
Sure. Thank you very much for having me on the program, Jonathan. It's a pleasure to be here. So I was working for Microsoft for many years, and when I was working for Microsoft, one of my last jobs, I ran a advanced technology division with about 900 level 500 programmers, and this division brought the new technologies that Microsoft was developing into the market, such as AI, what have you. And decentralized finance was also one of the areas that was being developed at that time. And I initially got infatuated with the technology. That's the nerdy side of me. I see the way the DeFi or decentralized finance will move into things. It's going to improve a lot of inefficiencies in the system. So while I was looking at the technology, I was looking at use cases. And then while I was looking at the use cases, I thought alternatives are a very interesting area to get into, and then start doing a lot of research on alternatives because alternatives, protect their value over time. They're usually income or dividend generating. And so I started looking at how I can use technology to, offer something on the alternatives. And the biggest problem with getting into alternatives was actually there are a couple of big problems or barriers to entry. One was the price. It's very difficult for someone to buy a 80 million pound building or a 10 million pound Picasso. So if you're not ultra wealthy or if you're not an institution, you're pretty much blocked out of that market. And then the second thing that I looked at, the operating models. If we were to bring investors into these asset classes, what is the best operating model so you can actually control EBITDA, valuation, return on investment. So after doing a lot of thorough research with wealth managers, private banks, investors, I focused on two asset classes. And at the end, I decided to go with the contemporary art because it has been the best performing asset class since 1986, since 1980s. And then B, it's very difficult to access. There are so many barriers to entry, both from a financial and operational and access point of view. So with that, decided to turn contemporary art into an asset class. So we basically at Mintus, as an investment platform, make art an investable asset class.
Okay, and so that wasn't necessarily driven by your passion for art. It's more a question of finding an asset class which was waiting to be, if you like, made accessible to a wider market. Would that be...
Not entirely true. So I have been collecting, since my early 30s, but very, very small means, nothing exceptional, nothing very expensive. So I always had a very soft spot for art because what it does is that it brings emotion out, and then if you can turn that into an asset class, then all of a sudden instead of making an investment into a boring XYZ ticker, you're actually making an investment to a Warhol or a Condo and a Basquiat, and you start learning about the journey of these artists, and then when you actually combine financial metrics into the artistic angles of it, it gets very interesting. For example, Picasso has 10,000 paintings. Out of those 10,000 paintings, the 74 of them are very valuable. Which 74 is that? Which one can you invest in? Which will give you the best value and what have you? So a lot of interesting, learnings came out of that journey.
Okay, so let's just be clear though what it is that Mintus is, and I'm talking in terms of UK investors here. I mean, you set up the company over here in the UK, and you have got authorization from the FCA and so on. But is it a fund, or are investors actually, perhaps you should clarify, are investors investing in a fund of artworks, or are they investing in specific artworks?
So it's, as you say, we are an FCA authorized UK company. We operate as an alternative investment fund manager. So investors can come into individual works of art, or they can come into a fund structure. So each of the artworks is owned by a separate company. And then these companies have independent board members. So they are managed separately. So if you have 150 different artworks, that would be 150 different companies. But you can also, through a Luxembourg AMC, actively marketed certificate, you can go into all the artworks that we have on the platform as part of a diversified strategy. So you can do both. The investment is for the individual artworks as minimum as £2,500, and then for the AMC is minimum investment is $100,000. And the AMC has an ISIN number, if you're familiar with the, working with private banks. So you can actually make the transfer within seconds, and then the investment shows up with your other stocks and bonds and equities in your monthly report. So the custody is still kept by your private bank.
Okay, so you started 2 years ago, but your fund has only recently been launched. If I'm a private investor, are you open for business now? Can I invest now? And if so, how do I do that? What status is the fund at the moment? How many artworks are in there, and how many might there be in due course?
That's thank you. So we launched in May, and since May we've been operating and we've been accepting investors. To come and participate in the platform, you have to be a qualified investor. So you go through an assessment test. So as an individual investor, once you pass this assessment test, qualification test, you can invest into the individual artworks, and the minimum is £2,500. Or you can come into the fund structure that we build in Luxembourg and Cayman through your private bank, through an ISIN number. And the minimum at that point is $100,000 for investment. And that's done through an ISIN number. So what that means is that the custody of that money stays with your bank, and then you see the valuation of the artwork that you invested in on a monthly basis with the monthly NAVs. And currently we have two paintings on the platform. We have a painting from Warhol. It's a self-portrait which was painted in 1966. It was last sold in 1991, and it hasn't been in public since 2003. It has been in 27 different exhibitions. So the longer the painting has been away from the public eye, the more valuable the painting is. And this is a very rare Andy Warhol. There are only 32 paintings in that series. It's a self-portrait. It's one of his, I think, most extraordinary paintings. Then we have an artist named George Condo on the platform, which is very well known in the art world, but not much known outside of the art world. And the painting that we have is a very unique painting that was done in 2018. And this painting is 198 centimeters by 254. And the interesting thing about Condo, he has been the most appreciating artist in the world right now. Condo's paintings gone up 44 times since 2002, whereas in the same period, S&P only went up by 3 times. So 3 times versus 44 times. And he's been returning about 26.5% since 2018. And the valuation on this particular painting that we have has gone up quite significantly since we put it on the platform 3 months ago.
Yeah, so I mean, I think a lot of people know him because he also designs album covers, isn't he, for Kanye West and people like that. Not that I'm a particularly aficionado of that form of music. But so in terms of the paintings, though, what are their say? Do you actually own them already, and then you're already made a commitment and you're going to resell them, or are you waiting till you get the amount of subscription that you need in order to go ahead and have the painting sold? How does that work?
So the way it works, we get the paintings from selective collectors in the world. So we don't actually go buy the paintings from auctions or galleries, because when you buy the paintings from auctions and galleries, there could be between 30% to 53%, markup on these. So we get the paintings from the collectors, and then we have an agreement with the collectors. We put them onto the platform, and then we say, we're going to raise money against for this painting. And in the case that we don't have any money, we don't have enough money to buy the painting, whatever that we don't raise, the seller keeps the remaining of the shares as a shareholder in the special purpose company that we have. So that way.
Oh, I see. So you're guaranteed to get your share in the painting, even if you don't raise the full amount that it is currently valued at.
Exactly, but with the fund structure, with the fund, we can actually then go to paintings, directly, immediately upfront, by buying them. So that also eliminates, some of the pricing, frictions, in there. But the way we do it, in order to bring the best value for the investors, we do a couple of things. First of all, we get a list of the paintings. And then once we get the list of the paintings, we have an AI tool in-house. I know AI sounds quite fancy, but it's actually a proper machine learning tool that looks at the velocity of that artist and velocity of that painting. So we look at the repeat sales of the particular painting. And then if we believe that the painting, hasn't reached its peak, or the artist doesn't reach its peak, and the painting hasn't reached its peak, there's still a potential for growth, that becomes a one criteria. And then the second thing that we do is that we do social listening about that artist and about the market, and just to make sure that there is no kind of like pumping and over marketing for that particular painting or particular artist. And then if it passes our desktop research, then we take it to go to three independent valuers around the world. We work with a very well-known company in London. We work with another one in New York, and a third one in Zurich. And then we get independent valuations against that painting. And then also we take that to a next level. We look at the exit potential, because we're not in the business to build a museum or a collection. We're in the business of exiting these paintings and then return investment back to the investors. Then if we also are satisfied with the exit criterias, then we go back and negotiate with the sellers, one more time to see if we can get the best price. And then if the valuation is at least 15 to 20% above the price that we were offered, then we offer the painting to the investors. And then this whole process is led by a team internal at Mintus, and our chief curator is a gentleman named Brett Gorvey. Brett Gorvey is he's one of the most important names in the art world. He was the chairman of Christie's from 2000 to 2016, and he's the guy who started the contemporary art movement pretty much. And so with him, he's a thematic investment expert, and he's also a purist from an art point of view. So with that, we try to get the best paintings possible to our investors.
Okay, and so then obviously I need to ask you about this, about the, what are the kind of fees involved in this? If I'm an investor, I'm coming into this thing and I bought my share, or I put in my money for the share. What am I paying you, and what happens when you actually realize the value of this painting, assuming you do?
So we have a 0-20 model. Basically, we don't take any management fee from the artwork. Because art doesn't create income, we didn't think that it was a good idea to take a management fee in terms of shares, from the investors, in order not to complicate things. So we said, we're not going to take any management fee. We take a 20% carry from the profits at the end, and a 1% exit fee. So that's how we make our money. So our interest is very much aligned with the investors in the sense that, we only make money when there is a profit in the process. And there is also one other fee that comes in the beginning. When we negotiate the price, we have a markup that we add on top of the price, which covers for the storage, insurance, legal fees of the actual special purpose vehicle, that painting that goes into, which is around 9%. But we do our valuation after we put that markup on top of the price. So basically that money doesn't come from the investor in a sense, because if the price that we were offered plus that markup is less than 15 to 20% of the market valuation, then we don't offer that painting. So we try to eliminate all the costs coming from the supplier in that sense to manage the process, manage the cost of operations.
So you said that that's the markup is 9%, you said, and then at the end of the period you pay an exit fee of 1%, and you take a performance fee or equivalent of 20% of the gain over the net purchase price.
The period is, we say 2 to 7 years, but we try to exit them within the first 2 to 3 years. We think that that's the right time for them to exit. But just to correct one thing, that that markup doesn't really come from the investor, because that gets into the syndication price, and that only we only syndicate if we think that we got a very good deal on the painting compared to the market value.
Yeah, no, I understand that, but of course it is a factor in how far it might actually appreciate over the time that you own it. Yeah.
Correct.
Okay, so and who do you think is the target market for this? Who are you really kind of looking to recruit into this fund or individual works that you're?
So we have three target audiences. The first one is the financially savvy investors. That is our number one target audience. These are anyone that understands, investing, understand, how to invest and, what have you. And because the fact that art as an asset class has been extremely resilient against the market downturns, it's highly uncorrelated to stocks and, bonds and the, equities. And also has an inflation hedging capabilities. It's been a preferred asset class for the financially savvy investors. So those are our number one target audience. Our number two target audience is the professionals who are early adopters, who wants to invest into new things and then want to protect a portion of their wealth is also comes as a second asset class. And then the third group is the art enthusiasts. These are people that are invested in art. They love a Warhol, but they could never own a Warhol, so they make a decision from that art / investment point of view. But the uncorrelated nature of the product plus the inflation hedging capabilities is quite an important determining factor why the investors come in. And also, as you know, diversification has become such an important thing. And like 10, 15 years ago, there used to be the 60-40, split, 60% on the fixed income, 30% on the equities and what have you. That's moving into a 30-30-30 split, and so 30% is being allocated into alternatives, and especially big pension funds do a very, very good job of investing a lot into alternatives right now. For example, Yale Endowment Fund, 75% in alternatives. British Rail Pension Fund, one of the smartest, I guess, pension funds in the world. In the 70s, they made a lot of investment into art, and then they're getting the benefits of that. So within that, a lot of the institutions that we speak with, they recommend 10% of the total wealth should be allocated, 5 to 10% of the total wealth should be allocated into art. So with that, financially savvy investors see that as an opportunity to protect their wealth by putting into this asset class, but also enjoy the benefits of the value increase that art has pretty much maintained since 1980s. I mean, since 1980s, the art index went up 52 times. whereas S&P 500 went up 18.9 times. So there was quite a nice uptake compared to S&P index.
Yes, and of course, one of the problems there is you can't actually buy an index. It would be a great thing to have an index fund against the art index, but you can't, of course, buy that, at least not with real art behind it. Can I just on one practical point, though, in terms of tax? I mean, if you invest in the fund, you obviously the gains are held within the fund as long as that is the case. But are you going to distribute the what happens to when you actually sold a work? How does the money get distributed immediately, and if so, in what form?
Yeah, it gets distributed immediately through the bank account that investors choice. So we do that within the 7 to 14 days after we sell the painting, and then each investor is different depending on what jurisdiction that they're in. They have different taxes that they are dealing with, and the only tax that that comes out of this is the capital gains tax. But again, we advise our investors to go speak to their accountants and tax advisors on their tax implications.
Of course, but the timing of the sale is determined by you. It's not determined by the individual investor.
Correct.
Well, okay.
And that's also quite an important point, because again, our job is to get the best possible return for this painting, for this investment. So with that, we look for the right moment to exit that painting, and then but we don't want to wait 10 years. We don't want to wait 8 years. So our timing is a bit shorter in that sense. Jonathan, you mentioned that you signed up to the platform. What was your experience?
Well, so far it's been very good, I have to say. I mean, I have subscribed for things in the past as a sophisticated financial investor, but the process by which you've done it is actually very easy to follow, very logical, and I worked my way through it in about 5 minutes. I am familiar with it, but it's very accessible, and certainly a cut above what one finds with a lot of other investment opportunities at this kind of level. Of course, we do have to take note of the regulatory considerations, and you do have to sign various disclosures, which I was happy to do, but it works very well. Very well. Why should I come to your fund rather than, I mean, why aren't there more funds like this? What are the barriers to them? I mean, there's one called Masterworks, which I think is quite well known, but mainly operates in a different jurisdiction. I think so where's the gap in the market? What are you able to provide that others haven't chosen to provide so far?
So number one is that because of our FCA authorization, because the way we have to operate, very, very ethically on this, we have taken a lot of the opaqueness out of investing into that asset class, because currently it's very difficult to choose the right artwork that you should invest in. And then if you even find the right artwork, I mean, even if I take a step back, actually, let's say you want to buy a painting today and you're going to a gallery, usually there's about 80 people in a waiting list to buy the same painting, if it's a primary artist or if it's a very secondary piece. So you have to you're the 81st person, and then sometimes the galleries say, buy this first painting, donate that into the museum, then we'll sell you the second painting. So there is this tremendous barrier of entry. So we eliminate that barrier of entry from accessing the artwork. Number two is that by going through all the right operational issues, like for example, HMRC is the only tax body in the world that wants to see the provenance of the artwork, so exact ownership history of who owned that artwork. Not many other countries are bound by that, but we're bound by AMP. So we use a very well-known New York law firm called Patterson Belknap to do that provenance work. So we go through that provenance work. When the art comes from supplier into the partners that we work with, we get these valuers come in with their ultraviolet lights. They look at the condition of the painting. They do a legally binding condition report, and then they revalue the painting based on that condition report. Next day, the artist's foundation, come in. They authenticate the work, so make sure that it's cataloged, authenticated work. Next day, the insurance, company come with their independent valuers, and they insure the, painting at a, about 30% premium to the, valuation. So there are a lot of like details involved in that. So with that, we try to do paintings past 1950 because there's so much data and cataloging from 1950s onwards. When you go, before 1950, that is not available. So with that, a lot of forgery issues, could come into a equation. So with that, we get an insurance that ensures the authenticity of the painting plus the value of the painting. And then this goes into a special purpose vehicle, which has an independent board. If something happens, this is a fund, that's a separate company, run by a separate, board. If you're sending your money, you're not sending your money to us, you send your money to a custodian, which is a third party, FCA-authorized custodian. So the money, sits with that. So the FCA process has built so many correct processes in place that eliminates, various, issues that an individual investor might face. And then on the fund side, a lot of the funds are they're quite run by one or two people. They buy without any regulatory guidelines, and then when you invest into a fund, you don't really have any transparency on the pricing or the provenance of the artwork that you're putting your money into. So with that, a traditional art fund is not transparent, is not open from a financial point of view. So when you compare us into those, with the data, with the regulatory, requirements, we bring a lot of transparency into the process. So I think that our number one difference is that to be able to access this as an asset class with the investment committees and everything else, and all the process that we put through with the technology. And then the second thing is that the easiness that it comes from, eliminating all those friction into that investment process.
And how big do you think this might become in terms of how much money you'd like to raise again? Because presumably, if you're in the fund, at least, a lot will depend on if you're just buying an individual work of art. Great deal will depend on how well you pick them, obviously. And if you want the diversification value of the thing, you need perhaps to have more than one interest. What's your ambition for this particular venture of yours, which I know you've started and founded yourself from scratch?
So for this year, we have $150 million worth of inventory that we're going to release into the market. And then we have two funds. The fund in Luxembourg currently is a $60 million fund. And the fund that we're setting in Cayman is a $150 million fund. So for art, our ambition, we want this to get to close to $1 billion mark from that point of view. And then at that point, we might look at other asset classes. And then when we choose, different asset classes, we look at three things. One, accessibility. Is this something very difficult to access? Number two is the operational efficiency. Is that something that can be operated very efficiently, where you take in return benefit for the investors? And then number three is the returns. How much value, how much wealth increase and wealth preservation we can bring to our investors.
So I think what I've discovered from looking at the platform, and I have signed up myself to see what it was like. There's a lot of stuff under there, which under the bonnet, if you like, which you can do lots of other things with.
Well, since we launched, we started to get a lot of interest from institutional investors. Institutional investors, as I maybe alluded before, 99% of our individual investors never invested in art before, and which was a very surprising statistic for us. And then the institutions, start to come in. So the funds, multifamily offices, family offices start to look into us, and they liked our investment criteria. They liked the people behind the business. So, for example, our chairman is a former CEO of Jupiter Asset Management. He's the current chairman of Rubico, which is one of the largest asset managers in Europe. We have former CEO of Sotheby's on our board. We have former chairman of Christie's on our board. So they saw the technology and the methodology behind the investment criteria. So with that, they start to allocate a portion of their funds into this asset class because of the uncorrelated nature of it, and also because of the inflation hedging capabilities.
So, of course, we are, I have to put this to you as well, I guess, we are entering a period when we've got high inflation, rising interest rates, we've got a war in Ukraine, we've got all these sort of things going on. And we've had a pretty poor year in the stock market so far. So this is going to be a test, though, of your sort of core belief that art is can preserve value through difficult times and serve as a hedge against inflation. So are you worried about the timing of which you're starting this?
Well, I mean, yes, but I mean that was not in our control. I mean, we launched it, and then like a week later, the Ukraine crisis started, and the markets started to go down. But actually, what is interesting about this, with all that, we have a lot of investors coming onto the platform, especially from institutional side, which is very, very pleasing to us to see that uptake. And then, and also, if you look at the history, if you run the inflation periods where there was very high inflation rate, and then run that against the other metrics, it shows over and over how resilient this asset class is against inflation, and also how uncorrelated it is during the times of crisis. When you almost like go back to history and then look at any time there is a huge geopolitical issue, the more investment goes into art, because with gold, you cannot carry gold. With art, it's protected. It's in a very well kept warehouses and what have you. So with that, I think probably we'll get more institutional investments as it's coming now than the individual investors. But again, because we're going after the financially savvy investors, they do understand that as a differentiator. So this is probably the best time actually to launch a product like this.
I think, I mean, the only issue I would take with you is I mean, art price indexes, they do give a slightly misleading impression because you can't invest in the art price index, and there's such a wide variance around the mean, if you like.
But actually, that's a good point. But what we do is that we use hedonic indexing. So what that means is that first of all, it's repeat sales. We only take repeat sales. And by the way, data comes from Citibank and then Livart data. And by looking at the repeat sales, you're not looking at single sales.
Yeah.
Now, by making a hedonic indexing, we also take out the outliers. So for example, if Francis Bacon was bought for 2 million and then sold for 200 million, if the CAGR of that painting is above the industry average, we take that also out of the equation. So with that, we come up with our own, index. But when you look at that, as I maybe mentioned earlier, the art index has returned annual 14% returns since 1986. I mean, that is an incredible annual return. This is an index, by the way. And then
it's been a year when, I mean, it's been a 40-year period when interest rates have gone down, basically. So, you would expect there to be some sort of uplift from that, which won't necessarily be repeated in the future. But I mean, it's a fact. But yeah, then the question is whether that will carry over the next 40 years. I wouldn't think they'll match that. But hopefully they'll match it enough sufficiently in order to make you a bit of money and make the investors a bit of money. I mean, if they, I don't know what you do if you get something wrong and it goes down in value. What were you going to do? You'd have a tough decision to make, right?
Well, I mean, the thing is that, again, the paintings that we choose, that is what goes into our investment selection committee, and also our AI analyses and everything else that we do. So we don't go after for speculative artists. We try not to choose artists that's at their peak. We always look at and a diversification strategy gives us an opportunity to make a bet on artists that's been delivering steady returns, artists that's been going up, and then also in the portfolio there are some early stage artists that will that we will think like, improve tremendously in the next, coming years. So it's a very nice diversified portfolio to look at, multiple different trajectories by multiple different artists.
Yeah. And so you've got 150 million, of potential paintings out there. I suppose to get proper diversification, is that enough to get, if your typical price is going to be what, 3 million, 5 million, that sort of thing?
We go between 1 million to 8 million range, because when you go below 1 million, the speculation point of it goes up, pretty high. So we have separate baskets for that. And then when you go above, 8 million, again, the price maturity kind of comes in. So we try to operate between, those two, areas when we do the selection.
So it's a bit like a sort of small cap fund in a way. You're kind of at that sort of register, if you like, in the art.
If you look at the art world, though, there are some paintings at 150, 200 million level, but the average value of the artworks, I'm talking about contemporary art, by the way, not masters or the priceless artwork. They do range around $5 million range.
Yeah, so that's a good unit size. Yeah. Very good. Well, I'll thank you so much for your time. I thought it was very interesting, and very glad I had a chance to do it. And I wish you well with it. I hope it goes well. It is going well, is it? I mean, how are you? Do you have against your targets? How are you?
We're, as I mentioned to you, we're getting very good take from the institutional investors.
Yeah,
actually is bringing much larger, chunk of investments into the company. So from that point of view, we're very happy the way it's moving so far.
Well, I think that brings us to nicely to a close. We've been talking to Tamer Ozmen, the founder and CEO of Mintus, this innovative platform designed to allow private investors and institutions to invest seamlessly in some of the best contemporary art of the day.